Ladies and gentlemen, good day and welcome to Q4 FY24 and FY24 Jupiter Wagons Ltd conference call hosted by Systematix Institutional Equities. As a reminder, all participants' line will be on listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sudeep Anand from Systematix Institutional Equities. Thank you and over to you, sir.
Thank you and good evening, ladies and gentlemen. Thanks for joining us today in the Q4 FY24 and FY24 earnings conference call of Jupiter Wagons. On behalf of Systematix, I would like to thank the management for giving us the opportunity to host this call. Today we have with us Mr. Vivek Lohia, Managing Director, and Mr. Sanjeev Kesri, Chief Financial Officer. I now hand over the call to the management for their opening remarks, and after that we can open for the Q&A. Thanks and over to you, sir.
Thank you, Sudeep, for the introduction. Good evening, everyone. And thank you for joining us on this call to discuss the earnings for the fourth quarter and for the financial year 2023-24. We have sustained robust momentum in our performance with stellar growth in revenue, EBITDA and profit after tax, both for the quarter and the full year. This performance validates the strong execution across core operations, as well as the scaling up of newer business lines. There are strong tailwinds at present for our sector due to several years of underinvestment, and we are pleased to be at the forefront of this exciting opportunity. We are delighted to announce that the total income amounted to rupees 1100 crore plus in quarter 4, marking an impressive year-on-year increase of 57%. EBITDA has shown remarkable growth, soaring to 14,772 lakhs, reflecting a substantial 59% year-on-year increase. The EBITDA margin was 13.3% in Q4 FY24, highlighting our focused execution strategy as we continue to report industry-leading margins. Notably, profit after tax has surged by 156% year-on-year, reaching 10,422 lakh. We are proud to have achieved the significant milestone of surpassing 1,10,000 of revenue in a single quarter for the first time ever. This exceptional performance in the fourth quarter caps off remarkable financial year for Jupiter Wagons Ltd, characterized by record-breaking revenues of over 3,600 crores and a profit after tax of 33,279 lakhs in FY 2023-24. Given the strong performance, the Board of Directors has recommended a final dividend of 30 paise per share, accompanied by the interim dividend of rupees 30 paise per share. The combined dividend for financial year 2023-24 amounts to 60 paise per share, resulting in a meaningfully higher payout to shareholders. Let me first start with railways. We continue to see robust demand from both the public and private sectors. Over recent years, there has been a notable increase in government funding directed towards the railway sector, accompanied by a marked rise in actual spending. Notably, 3 new railway corridors are presently under construction, promising significant relief from congestion within India's rail network. Moreover, over the past 12 to 18 months, numerous substantial contracts have been awarded, spanning bullet trains, Vande Bharat train sets, high-power locomotives, freight wagons, forged wheels, and more. Railway authorities have implemented various strategies to bolster their share in the freight transportation mix. Projections indicate a rise in the rail freight modal mix from 29% in fiscal year 2024 to 35% by fiscal year 2031, driven by factors such as cost and efficiency of rail over road, GDP growth, improved infrastructure and connectivity, supported by increased government focus on rail freight. In the freight segment, private sector involvement in wagon procurement has surged significantly, buoyed by government initiatives like Liberalized Wagon Investment Scheme, Automobile Freight Train Operator Scheme, and Wagon Leasing Scheme. As a result, demand for freight wagon is expected to witness substantial and sustained growth. Passenger services to remain a focal point, with capacity being expanded for passenger rail as well as development through metro rail projects in several Indian cities. In terms of outlook, we are pleased to report order backlog of rupees 7,10,166, our highest ever. This has been aided by order wins from both public and private sector customers, including Ministry of Railways, Ministry of Defence, and a leading auto manufacturer. These contracts involve the manufacturing and supply of various types of wagon, bolstering our order backlog and providing strong visibility for the future. Jupiter continues to maintain its position as a leading provider of private wagons in the industry. During the quarter, we acquired Bonatrans India Private Limited, which further solidifies our integrated business model. It empowers us with the critical ability to manufacture wheel sets in-house, thus enhancing our vertical integration and overall production efficiency. This strategic move underscores our commitment to bolstering our capabilities and ensuring a more streamlined and cohesive production process. By bringing wheel set manufacturing under our umbrella, we are poised to achieve greater control over quality, timelines, and cost effectiveness, thereby solidifying our position in the market and driving sustained growth. This development marks a significant milestone in our journey towards excellence and underscores our relentless pursuit of innovation and operational excellence. Further, as part of Make in India initiative and reduce import dependency, we would set up manufacturing facilities for complete backward integration of wheel set manufacturing. Further, the integration process following the acquisition of Stone India is progressing smoothly and remains on track. Looking ahead to fiscal year 2025, we are optimistic about our prospects, particularly with imminent launch of our eLCVs. Additionally, plans are underway to expand our brake system and braking business, further enhancing our outlook for the coming year. In our braking system and brake disc segment, we are witnessing encouraging progress in line with our expectations. We anticipate a significant increase in execution and performance throughout fiscal year 2025 and remain confident in the growth trajectory of these businesses. With that, we are ready to take questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Yeah, hi. Good evening, sir, and congratulations on a very good set of numbers. So my first question is, what would have been the private wagon ordering for FY24, and is it possible to give us a sense of market share and the outlook for FY25?
Yeah, good evening, Mohit, and thank you. Private, again, Jupiter continues to dominate the private segment. So if you look at the private order books, I think Jupiter's share would be more than 60 to 70% in this segment. This year we have delivered the maximum number of private rakes. I think over 100 rakes have been delivered by Jupiter, which is by far if you compare to the rest of the industry, there is a significant difference between us and our next competitor. Going forward also, our private order book remains very robust. I think 40% of our order book is still private, and we continue to see the momentum. And this year we will be manufacturing I think more of our order book will be much more specialized wagons, both in the steel, cement, as well as the auto segment, and which will continue to be industry-leading designs.
So last year we had a very good opportunity from the government side, from the Indian Railway side directly. So is there any color we should think about the opportunity from the Indian Railway this particular year, and is there any tender which is awaiting to be closed as of now?
Yeah, already there is one tender. I don't remember I think it's close to about for 6,000 wagons, which is going to be finalized very shortly. But beyond that also we see the growth momentum to continue, and the freight loading numbers have been increasing substantially, which we can see, as well as the core sector, especially the demand for the coal, for the steel, and other core sectors remain very strong. And we expect the growth momentum to continue. I think post-elections we should see significant tenders coming up.
So my last question is, what is the plan for Bonatrans India? Can you please help us with a medium-term outlook? What is the kind of capacity you're looking at? What is the kind of capex required to achieve that capacity?
So this year we are looking to produce about close to 15 to 18,000 wheel sets in Bonatrans, and we are looking at revenues of about 400 odd crores. This will, I think, significantly help us as a lot of the production will be captive, and that will definitely help Jupiter in terms of our own freight production as well as our margins. Beyond that, I think our focus is to completely backward integrate this facility. We plan to do it over the next 18 to 24 months. There will be a sizable investment there, and we already have the technology lined up through our partnerships in Europe. Further, I think there's a significant export potential because one of our significant partners and promoters in Jupiter Wagons, which is Tata Wagons, they are again very keen to acquire wheel sets from India, and right now they are facing a challenge because of the Russia and Ukraine conflict. So yes, so we are very bullish about that business.
Understood, sir. Thank you and all the best. Thank you.
Thank you very much. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants, please limit your questions to 2 per participant. Should you have a follow-up question, we will request you to rejoin the queue. The next question is from the line of Rishabh Parekh from Sunidhi Securities. Please go ahead.
Hi, thanks for taking my question. Just a couple of questions. One is, on Bonatrans, can you all give some more color on the kind of capacity expansion that we will be doing in terms of, how many wheel sets we'll be able to manufacture once the full capacity is on stream, and revenue and margin impact on that? And what would be the amount of the CapEx spend?
So in terms of capacity, I think we are looking to produce around 200,000 wheel sets. That is what the capacity, 200,000 wheels, which is about 100,000 wheel sets. So that is the capacity plans which we have, out of which a significant portion definitely will be earmarked for exports. As you are aware that Bonatrans already has all the necessary certifications, both in India for supplying to the metro as well as for Vande Bharat. Today, Bonatrans is a significant supplier to Siemens, to Alstom, to BEML. For the Vande Bharat as well as the LHB coaches, we are supplying wheel sets. So all the necessary Indian as well as freight. So all the Indian accreditation is there. Further, it is accredited to supply to Europe as well as to North America. So the idea is to build capacity so that we can play a significant role in these markets. In terms of investments, I think our capex in this business will be anything between 1,000 to 1,500 crores of capex, which we are looking to invest in this business. And margins, again, I would not like to comment on margins right now, but definitely compared to the wagon business, the margins are higher in the wheel set segment.
And just a follow-up question on this, so that we are going to do 15 to 18,000 wheel sets in FY25. So what would be the improvement in our margin, because a lot of these would be for captives. So how much margin expansion can we see in FY25 because of integrated wheel sets?
So again, but I will not comment on the overall in terms of numbers, but what I would say is that definitely compared to FY24 and FY25, not only because of wheel sets, but because of the braking business and the other new segments which the company has entered, there will be improvement in margins, and it will be a very visible improvement in margins. It will not be something marginal, but there will be a visible improvement in margins.
And sure. And can you give us some color on Covis and DACO for 25?
So as I've been telling in all my earlier calls, that this year you will see the execution in both the businesses. I think combined in both the businesses, we have order books of more than 300 crore plus, and there is going to be significant exports also happening. So I think FY25 is when you are going to start seeing revenues and profits being accredited in both the businesses.
And the ballpark revenue number, can it be about 500 odd crores?
We are looking at least about 300 crores of revenue at least in both the businesses.
Sure. And so, last question on our net debt. So post acquisition and the QIP, what is our net debt position?
Net debt is around zero because the long-term borrowing we don't have, and we have the sufficient cash available. And if you take the short-term borrowing also, so it is around zero.
Understood. Okay, great. Thank you.
Thank you. The next question is from the line of CA Garvit Goel from Invest Analysis Advisors LLP. Please go ahead.
Hi, am I audible, sir?
Yes, sir. Please go ahead.
Good evening, sir, and congrats for the good set of numbers. My question is on the Bonatrans only. Just a clarification on, like you mentioned, in this year we will close to around 300 CR kind of top line. So just to understand a bit, are we going to produce for the outside players, or are we going to the captive consumption? Because you mentioned two things here. So can you clarify the thing?
Yeah. So good evening and thank you. No, as I mentioned in Bonatrans, it will be both captive as well as the outward market, because that is again a significant business for us. As I mentioned that we are already a primary supplier for most of the metro projects in India, as well as for the Vande Bharat and LHB passenger coaches. So that business is going to continue to remain a significant business for us, and compared to freight, per wheel set, both in terms of the pricing and definitely in terms of margins, because these are more complicated wheel sets, so it's much better than on the freight business. So it will be a mix of both captive as well as I think outward business.
So 300 CR is from the outward business. Is that understanding correct?
No. 300, basically, I said it will be between 300 to 400 crores. That includes both the captive as well as the outward business.
No, if it is captive consumption, then how it will be, it will be there in the top line. It can't be there in the top line, right?
No. The total revenue which we are expecting from Bonatrans in FY25 is around 400 crores. This 400 crores will include both the captive business as well as the outward business. But in terms of the breakup, specific numbers right now, we are not in a position to share.
Okay, sir. Okay, fine. And sir, board approved 1,000 CR QIP. So can you please put some color on the purpose of raising those funds? Like what are the exact plans for the utilization of these funds? You mentioned about some new products, including those automatic doors and the vacuum toilets as well. So can you please elaborate on your plans on it? Like what is the expected capex for it and how the funds are going to be utilized?
I think for us right now the most significant and the major capex is towards our wheel business, where we see a very assured roadmap and a market which is there. And as I mentioned that it is a very margin positive business. So most of I think whenever we do the fundraise will be towards the capex requirement of the wheel business, and definitely some portion of it will be used for other businesses, but the significant investments will go towards the wheel business.
Right, sir. And so in this quarter, we did a run rate of 840. Just the last question, please. In this quarter, we did a run rate of 840 per month for the railway wagons. So considering that we are currently at 900 capacities, right? And with significant orders to be executed in next 12 months, like you mentioned, and order book is also reflecting the same. So do you see any slowdown in ramping up these orders or upcoming order inflows? And if not, then so what are your plans to further expand on the capacities on the wagon side beyond 1,000 wagons per month, sir?
So as I mentioned, we are right now, our target is to achieve 1,000 wagons. We are not looking to expand beyond that as of now. But then again, that is also subject to how the order book flows over the coming years. We don't see any significant slowdown in the order books. I think on the contrary, post-elections, you will see whatever indications which we have, there will be an uptake in terms of the demand. So again, our first target is to achieve a consistent run rate of about 1,000 wagons. From there on, we will decide as how to move forward.
So by when it is expected, sir? 1,000.
I think quarter 2 is what we are looking at.
Okay, sir. Fine, sir. Fine. Congrats again and all the best for the future.
Thank you. The next question is from the line of Mahesh Bendre from LIC Mutual Fund. Please go ahead.
Hi, sir. Thank you so much for the opportunity. Sir, on wagon side, the incremental orders that are expected to come up maybe during the year, given the current order book of all the wagon manufacturers, do you think there is a scope for us to improve our realizations in those new orders of wagons and margins could be much higher in those?
Yeah, Mahesh. So, definitely, as I had mentioned in my call that, we are right now focusing on a lot on the private order book, and there also, there are certain new designs of wagons which we are currently in the process of executing, which, those are very complicated designs, and most of the industry is not producing those wagons. I think Jupiter is the only producer of those wagons. So there's definitely we expect the margins to improve, and combined with brakes getting produced in-house and wheel sets again becoming captive, so definitely there will be an impact on the margins.
And sir, is it also true for the railway business also, the railway wagons?
So on the railway side, definitely there is no, in terms of, I think the margins are consistent and they're going to remain like that, but definitely going forward, you will not see any significant uptake in margins. The uptake in margins in the railway business will happen through the efficiencies which we bring into the business.
Sure, sir. Thank you so much.
Thank you. The next question is from the line of Bharat Shah from ASK Investment Managers. Please go ahead.
Yeah, hi. Wanted to understand the cash flows for the year, operating and the financing and investment cash flows.
So I will give the line to Mr. Sanjeev, the CFO. He will guide you on that.
Yeah, the operating cash flow, this year we have generated the cash of around 100 crores. And after the payment of the income tax, there is a use of the, in the operating, around 6 crores only. But that actually increased due to, we increased our product sales revenue from 2,000 crore to 3,600 crores. And consequently that inventory has increased by around 400 crores. So this is the reason that you are finding that there is a cash used around 6 crores in the operating cash flow.
I wanted all the breakup of the cash flow, operating, finance, investment cash flow for the year.
Yeah, it is available. Yesterday, as per the LODR requirement, the cash flow is already given to the stock exchange. So you will find that detailed cash flow there.
Okay, I'll check that out. Sorry, I missed that. And on the order book, what I heard was about 7,100 crores, right?
Yes, you are right.
And what is the breakup of that, and what kind of execution cycle do we see?
So, I think of the 7,000, majority of it is related to our wagon order book. I think close to about 75% would be wagon, and I think these order books have to be executed over the next 18 months.
And the balance?
Balance would be related to the CV business, the commercial vehicle business, which we have.
The containers and the brake system also.
And that would be fulfilled by what time?
In this financial year, FY25.
The entire remaining almost about 1,700-1,800 crore of CV business would be executed in the current year.
Yes, correct, absolutely.
And from the wagon business, I presume in the year maybe 2/3 of the order book will get utilized.
As I've told you, 18 months is the execution timeline, and every quarter we keep on adding significant order books. So there'll be a rollover which will happen on the order book side. So, and as you have seen over the last year and a half, though our execution has increased significantly, but our order book keeps on increasing quarter on quarter. So I think you'll continue to see those trends going forward also.
So 1,700 crore of CV, about 3,600 of Wagon. So that makes it 5,300 and maybe some amount of the current year order book executed. So about 5,600 crore turnover is a reasonable